All right, guys. Hey, this is Eric again. Hey, that last video was a mess. I apologize. I'm just going to do another video here. I'm going to try to explain myself a little bit better. Sorry, I do this on Google Hangouts. It's live. I don't rehearse. I don't do anything. And I just got to dive right in and do it. And I did a really poor job explaining that. So I'm going to get real simple, and I'm going to use just one platform here. I'm going to use the Thinkorswim, talk a little bit about options. I'm going to clean it up. So this is a take two. And again, I'm sorry. I apologize for the confusion with this. But that's just the way it goes, I guess. So right now, let me get rid of this. So right now we're looking at SWN. Let me jump to the charts here. Let me jump to the active trader. Okay, so let's do this. What I talked about was the whole point of this, what I was talking about, is over at InvestFeed, we have our picks over there. Instead of playing the picks and doing well with the picks, I've been playing the options. And for since late February, hitting on a year, I've been playing options primarily. That's all I've been doing is options. And it's been working out really well. And so again, we've had people who've had questions about it and want to know how to take advantage and how to learn options and get some of those killer returns. And so again, I'm trying to explain it, and I'm new at this. I've only been doing it a year. Again, I've been really successful, but I try to keep things really simple, and I'm not a teacher in options. That's why I've kept this under my hat. But at the same time, the returns have been just crazy. Like easily, I can't even say 100 times better than stock returns would be. I mean, really. And I'm just trying to explain a little bit and keep it very, very, very simple of what I do. Okay. And so with that, I'll quit yakking here. So just the other day here, yesterday, one of the new picks I put was for SWM. Okay, let me do this here. Okay, so here's down here, here's the daily chart for SWM. This company sucks, okay? Got a nice trend here. It's just heading downward, downward, downward. We got a lot of volume bet. You can see down here. Came to a low of 5. It's currently actually making a new high, but I'm not convinced. Okay, so let me zoom in a little bit more. A lot of times this would be a buy signal for me once it makes a new high. But I'm not bullish on this stock because their fundamentals are extremely bearish. I don't even know how they're still in business. I'm exaggerating almost. But I'm expecting this thing to come back down. Okay. So again, let me do this. Let me just kind of get a further view. So I'm expecting for us to see at least $6. That's what I'm expecting this thing to do. So what I like to do, so I've made my pick. I say SWM. And so I posted yesterday that I bought some June $8 puts. Okay. Now with an option, I'm using right here, I'm using the Thinkorswim platform. I'm using the paper trading account here. And just to kind of show you. So if you use Trade King or any other platform, they have the same thing. It's a little bit different, but you'll see the options chains. Okay. And you can go there and see the option prices. Let me jump to that and I'll show you again what I'm talking about here. Okay. So, up here is the intraday. It's the 1 minute chart. Just kind of get an idea on things here. So anyways, so in this case, you want to look at options. And I go over here. That's SWN. Okay. So basically here it is for today. SWN. Stock's currently at 877. Sorry, I can't blow this up anymore. 877. It went down 3 cents today. Volume is good, 25 million. And so right down here is the options chain. It says options chain there. Okay. I like to look at options that are at least 100 days out. So here's June. So I just hit the drop down there. And then here are all the strike prices. Previously, I talked about strike prices. I thought it was like a target. That's way wrong. The strike price is pretty much, if I'm buying a put and I think it's going to go down, I want it to be underneath that strike price. Okay. So I don't, it's not necessarily a target. But I'm just going to show you what I do. You have to study options a bit more. There's a lot of other sites out there, people who teach options, and they're very much clearer than I am. Okay. In this last video, I learned that I cannot explain this very well, but I'm going to show you what I do. Okay. And if you take what I do and you like the premium or the picks that I have at InvestFeed and you want to apply options, just find a marriage in between there. And you may have your own option strategy, but I'm just showing you what I do. So again, for instance, for SWN, I like this. I think this thing's going to go down. So again, I look at the option chain. I look for at least 100 days out. I used to look for at least 50, but I still found I needed some more time on it. I'm willing to pay a little bit more premium to go more than 100 days. Okay. And the premium is the price that you're going to pay for that option. Okay. So in this case, yesterday, I came here and I bought, the June $8 puts. Here's the puts are on the right side. You can see it says puts up there. That's where I anticipate the stock price to go down. This side over here on the left are the calls. And that's if I was bullish on it and I want the stock to go up. But in this case, SWN, $8 strike price. And then to determine your break-even point, not counting commissions, is you look at whatever price you enter minus 8. So in my case, I got in yesterday at 210. It hasn't moved much. I got in at 210. Okay, so 8 minus 210, what's that? 590? Help me God. All right. Yeah, 590. Okay, so that's essentially my break-even point. So obviously I have a ways to go, but I also have 144 days for it to achieve that. Okay. So basically I'd come here and I would pick, on the ask. I don't always buy on the ask. I always try to find in between the bid and the ask. Okay. I don't always go market price. I found too much fluctuation. I've gone market price and even had my buy price outside above the ask. I mean, at least I get the bid and the ask, but I want to be hopefully somewhere in the middle. And sometimes I'll put an order in for something in the middle. Like in this case, like $2 even, let's say. I guess it's not, it's what, 210, 215 or whatever. I'll find it in between. Yeah, 215 or so. And I'll put an order in there and see if I can get a buy. Sometimes I don't, and I'll cancel the order and bump it up to maybe 220, and then I will. But that still saves 6 cents times 100. So it adds up. Okay, so let me jump over to, so pretty much I'd make the buy. Okay. I wouldn't spend a lot of money on the contract. Each contract is 100 shares. Okay. So when you buy one of these, it's going to be for times 100. So $2.26 per share, essentially times 100. So this right here, if I were to buy this, it would cost me $216 and I would have control of 100 shares. Okay. That's a pretty cheap price to control 100 shares. Yeah. So if you're new to options, don't go out and think, oh, I'm going to buy, 10 shares. That's not, it's going to be a lot more. That's 1,000 shares. So I keep it small. If you're just new to trading, new to options, start small. Buy just one or two. I've bought one before. Definitely. If I was a little uncertain about the company, but it was a technical play, I'll buy one, see what happens. And when it doubles, and I really wish I would have bought 10 of them, obviously, but it's okay to start small. Okay. It's worried about considering what your risk is. I'm not going to go throw 10 grand on an option. I would definitely have to be playing a lot more money to do something crazy like that. But I'll spread myself out and I'll play about a dozen or two of these companies, these options for these underlyings here, and just at a few $100 a piece. But I'll have a couple dozen going on. Some win, some lose, and some win big. So that's that. So let me jump over real quick to the analyze here, think back. Now what this is on their platform here, allows us to type in an underlying, a stock here, and go back to a date, and we can see the price of the option at that time, and then we can see where it would be today. Okay. I talked about in InvestFeed some of the stocks that we just closed out here on the 21st that I've been holding for a while. And pretty much their gains were between 50% and 80%. Okay. And I'm going to show you one. So let me jump here. I'm going to go to ECA. ECA on 1012. Okay. Bear with me here. 1012. I'm just going to go the next day. Just say I'm a day late. Okay. 1012. It was at $8.39. Okay. 1012. That's all the way back to here. Okay. So I'm going to say, so on InvestFeed, I actually made this pick in this play. All right. And you can go on there. If you're a premium feed member, you can see it. You might see it otherwise. I'm not sure, but now it's after the fact. But I went short on it here. Okay. So, and that's my pick. So then I'm going to come in here and say, okay, instead of myself personally buying the stock, I'm going to buy the option. So I'll come here and I'll look for something beyond 100 days. I could do 94 days and say good enough, but why don't I do that just for fun here? We'll go 94. It's kind of close enough. Okay. So currently the stock is priced, and today is, let's say it's October 13th, and it's $8.39. Okay. So what am I going to buy? Well, my strike price, let's say, is 8. Okay. So that needs to drop 40 more cents, right? Plus it needs to drop, say, 75 cents to pay for the premium. All right. So what's that? 725. You say 8 minus 75 cents. 725 would be my break-even point. Okay. It's important to know what your break-even point is. And that doesn't even count commissions. Okay. But just for fun here, looking at the premium and the strike price, that's where it needs to go for me to break even on it. And I'll show you here an example. So let's just say I'm going to buy this right now. Okay. So I have the bid here. I have the ask here. And you come over here at the ask. And so it's January 8th. Again, we're 94 days out, close enough. And say here's the price. It automatically put my buy price between the 70 and the 80, obviously. Let's say you don't get it. Let's just say for the heck of it, you got it at 78 cents. It's still fine. Okay. That's for one contract. Okay. So it essentially cost me $78. Okay. Well, that's cheap. Let me buy, I'll keep the math simple. I'll buy one. It doesn't matter. Okay. So I'll buy one. So I kicked out $78 plus commissions for this ECA. And my break-even point is 8 minus 78. Okay. And so that would be $7.22, just so you have an idea. Okay. And so what this line is down here, this shows where we bought it. Okay. Right here. And this is kind of our profit line here, this yellow line. And here's 0. So right off the bat, it went down. It dropped down and went down $19. Okay. Went down 20 bucks pretty much. And because the stock went up for a couple of days, and then it pulled back down and just kind of traded sideways here a bit. And you can see we didn't really make much money for a little while on this one. Well, we certainly didn't make much money if you were to buy the stock outright, because it's just trading sideways. And the option essentially did as well. Looks like we just kind of stayed above 0 and we went down, lost a few bucks. It's just in the value of the contract. And then finally this thing starts to turn. Okay. And it starts to drop. Well, that's good. As you can see now, your profits, the value of this contract is increasing. Okay. And this yellow line represents your profit. Okay. And what did I say the break-even point was? 722 about, right? Where would that be? Maybe call this guy here this day. Yeah. Anyways, you can see obviously we're starting to make money. And this thing just continues to drop, drop. Trade sideways a bit and then drop again most recently here. Okay. So right now, let me see if that's the, okay. So this red line is the expiration date on the contract. So if you were to sell at that date, you've hit a maximum $347 profit off your $78. That's a 440% return. Is that right? So basically, if you were to sell it, wait till the contract expire. I don't recommend waiting to the last day for the contract expiration, but I like to take profits. But if you were to ride this out, that's what it did. And this stock's going to continue to fall and fall and fall. And this right here, you can see barely. It's probably going to turn again next week and drop down some more and follow that channel all the way down even more. Okay. Let's take a look. Same stock, but let's pretend that we also decided to, not also, but let's say we looked at the April 185 days out. Let's look at the 8 one again. Okay, and so instead of 78 cents, you see it's higher now because we're buying more time. Okay, so just for fun, let's just say instead we decided to go with April. Now this is going to price it in between the bid and the ask, but just for fun, let me raise it up because realistically, you always get screwed around in your price. Okay. So here we are. Same thing. We bought it all the way back here. Went down a little bit in value. Okay. And with this tool here, I can change the date here and look and see where it'd be on a certain day, give the exact number. But this line best represents it. And again, same kind of place. We start as this thing starts to fall, we start to climb. And then this red line again is the January expiration date, but it continued to climb. $345 profit at one point. Now you can see the market's gone up a bit. So 345. And how much it cost us? Let's say 128. So that's still 270% return. So that's just that one. Let's look at another one here. Let me get rid of this one. We'll check another stock. Okay, what was the other one we did? Was it Seadrill? Okay, Seadrill. Seadrill we got in on 10/12. Okay, same. Let's just say the 13th, same day. So again, here's the January, which is 94 days out. April 185. Let's just say again, let's look at buying January, 94 days out. The stock is currently priced at 703. 703. Well, my strike price at 7, less the premium. So sorry about that. Anyways, so I'm going to buy the $7 put. Okay. It's for January. So again, here we go. So this is Seadrill. Let me back up a bit. We can kind of see here. Here we go. Okay, here's our 0 line right there. So you can see we kind of floated around the 0 line. First, it went down, it went up. $36 profit, not a lot. Well, still that's 30% because here we only paid $107 for the option, and we already hit 30%, and stock didn't even move anywhere. Then it went down. It's pretty volatile. Okay. Not sure what the gap is there, holiday or something. And then here we go. Now the thing starts to fail, finding new lows, and this thing really takes off. And you can see over here on the left where we are with as far as profit. That's not the value of the option. That's the profit. And so it climbs and climbs and climbs. This was the January contract. So again, right before this red line, the January expiration, again, $374. That was the same number last time. That's weird. $374. And this time we paid $1.07. So that's a 349% return. Okay, if you were to ride it all the way out. And again, let's go back to April now. Same thing. Where are you purchasing here? You like to buy a little bit out of the money or a little bit in the money. I'm not going to say it doesn't matter, but you're going to fork over more money here. I find it optimum to be kind of really about here. If you really wanted to go for long, you could buy out of the money, and that's these others that are further away from the actual stock price. Okay, because you see here between 7 and 8, it's at 7. But if you're to say, I expect this thing to go all the way down to 3 minus the 30 cents, So it's at 265. You're going to do really well. It's only going to cost, it's a long shot. Okay. But let's see what happens. Okay. Well, what do you know? So this is the April. This is April. And let's say we bought this contract just for fun. Let's say 30 cents instead of the in between. Okay. All this time, this thing's in the red because it's nowhere near that $3 strike price. Oh, but wait, now it's starting to break down. Well, now you're starting to climb in value. Now you only kicked out in this option, this example, it costs $30. We only bought one. Okay. Just to keep the math simple. Well, you get right here, you get up to here, you pretty much doubled your money already. You already got $30 in profits, but we still have a bunch of time before the contract expires. Let this thing continue to fall. Pulls back, climb. So now we're $30 turned into $100. Look on the far left over there, $99 at the peak. Okay, and this thing still has, 3 months to run into the ground. So, yeah, so, again, there's another 300% return, right? And you could dream and say, 30 cents, how about 10 of them? All right, well, same thing. So this time you kicked out, $300, but your profit is $1,000. If you were to do that, just let it run. So that's pretty much options, and that's what I do. I take my picks, and then I look ahead 100 days, and I'll buy a put near the strike price. Let me look at DSX here, just for fun. I'm going to see what this shows. DSX back here was that day, 11/11. Okay, let me see what happens here. I'm mimicking here a real purchase. I want to see what it shows. Okay, it does. That's crazy. Okay, so I was looking at DSX 11/11. Where's 11/11? 11/11. Okay, so 11/11 right here, right? Okay. So on this day, this is Diana Shipping. I knew they just stunk. And I said, I'm gonna see about buying some options. And I was again playing and learning. So on this day, you can see it's priced at $5.97. And so I was looking at the 5. Okay. So the bid is a nickel and the ask is 10 cents. I was looking for something cheaper. I thought, I bet this thing can go to 4. And so the bid is 0 and the ask is 10. I'm throwing my money away. This is a long shot. But what I did do was I actually got it for a nickel. Okay. I was able to purchase it for a nickel. I threw that order out there and someone took it. And then on top of it, I bought 20. I just kicked out $100. Was all I did. Okay. And it was a long shot. And I'm watching this thing. And again, here's where I bought. Then like the next day, because I was looking for a new low, and it finally broke through the new low with this guy and just started to tumble. Then I broke 5. Then I'm into 4s. I'm like, oh my gosh. And I got till December right here. And I end up selling some here. And then I finally sold, I think it might have been here, down here, and then here. But let me jump ahead to right before the expiration. But I just cleaned up on this, and it was just actually a gamble. When did this expire? October 18th, December 18th. So, 750. So I sold mine at one point for $1.55. I'm trying to see where the price is for, I forget, but this was one, it was a long shot, and I bought it. It cost me a nickel. I remember I sold some at like 60 cents or 55 cents, and that was like 1,000% return. I was like, what the heck? And then I bought more and sold more, and just watching this thing tumble. And I just bought some more here recently. It's kind of getting a little pop, not much of a pop, but looking at this channel here, we might come up again to threes and then pull back again. And I'm just riding this thing all the way down. But the option price, I mean, look at this again. In this case, it was, well, $100. I bought a nickel a piece, $5 times 20. That's all I kicked out was $100. And in this example here, profit was 680. So, you know, pretty amazing stuff. And all I did was kick out. That's the bottom line, is all I kicked out was $100. $100. I mean, sounds like you'll take that, right? So that's all I'm doing. Okay, good. That video is a lot better. I definitely didn't get myself into trouble explaining anything I didn't know what I was explaining about, hopefully. But that's the honest to God truth. That's what I do. And yeah, definitely learn more about options. Try to keep it really simple. There are a lot of options out there that people employ. Is they'll buy straddles and strangles. They'll buy both a call and a put at the same strike price. So they're betting both ways, and they're hoping one takes off hard the other way, and it gives you those killer gains. And then of course those gains eat away at the cost of the other, and you do well. I've done that a couple of times and never seemed to work out. But again, I just keep it really simple. I think the stock's going down. I'll buy a couple contracts, sometimes anywhere between 1 and 10, sometimes more. And watch it go, and then ride it out 100+ days and take profits. If the market turns, take your profits, get it off the table. You can always re-enter again. That's it. That's all I do. All right. Well, folks, I hope you liked the video a little bit better. Notice the title of the video. It went from options 101 to options 99 because I'm convinced after that last video, I don't know what the hell I'm talking about with them. So options 90. All right. If you have any questions, please reach me over at topflighttrades@gmail.com. I'm at InvestFeed. I'm at StockTwits. We're on, Facebook, the Google Plus, everywhere. Instagram, even. Posting charts over there. Getting a good response there too. That's good. Have any questions, get a hold of me. Oh, and of course, topflighttrades.com. We're over there too. So have a wonderful night, folks. Enjoy your Saturday night. Hockey night in Canada starts right now. I got to go. All right. Go Canucks. Talk to you later. Bye.